Good morning, good morning. How's everybody doing? I something caught my eye, and I don't usually use this very often, but I just wanted to show you guys a little bit of a lesson in inventory. Um, and what I'm talking about, if you look at the chart in front of you, these are what we call composite profiles. So you take a bunch of profiles and you stick them together. And it's pretty interesting when you go and look at it. You'll see the trading, into the end of the month. And this week, you see it's really, really clear. Looking at these charts, this is what we call the cost basis, right? So this is a composite profile. There's a bunch of days that I've squished together. So you can see if you flipped it on the other side, you know, look like a bell curve, right? So the majority of the inventory is priced here between say 74.20 and 74.60. Okay. And then we took it and we sold it up here. See that? Now, yesterday we put it on sale. And when we put it on sale, look at where is yesterday's low compared to the top of that cost basis. You see that? So does that sort of, any light bulbs going off? I know it's summer, it's almost the weekend. I get it. There you go, Italian trader. They stopped selling at the top of the old cost basis. Cool. Okay. Not the middle, not the bottom, the top. Why did they stop selling there? Because the people who were short, the people who were short here, they all came in and started buying as soon as we got to that cost basis. And now look at where we're selling. We're back in the distribution cost basis. You see? This is the current overnight. And overnight inventory, my friends, is 100% long. And we have not had a decent correction. In fact, if we open here at 75.46, we're going to open on a gap. Isn't that weird? Yesterday we have liquidation and everybody thinks the war's back on, it's the end of the world, right? Everybody thinks, oh my goodness, the war's back on, right? It's the end of the world. And now, if we open on a gap up, you see how the business changes overnight. So if you read the news, you'd be short the living hell underneath 75.11, right? If you trade off the news, you'll be stuck short here. trying to cover here. That's why the market is opening on a gap up, if it opens right here on a gap. Let's see. Let's go look at the next chart. Okay. There's that previous day high, which is just yesterday's high, which is the M high, the last half hour of trading. And you'll notice that every time the market's been long and liquidated it down, we came in yesterday's high, boom, right back up. A little bit further down, boom, straight back up. So if we open here, for example, right? If we open up at 75.47, we're going to open on a gap. And this is what I call a real gap. When you open outside the previous day's range, what it means is there is a change in business. You cannot buy ES for the same price that you bought it yesterday. That is a change. That is why I look at gaps when they open outside the previous day's range, up or down, right? This time, yesterday you were buying it at 75.14. Good luck trying to get it under 44 right now. Does that make sense when you think about it like that? Can you visualize it? Is it up? Yeah, because we need to like simplify the business so you can visualize it so you know what you're doing. Otherwise, you're just spinning your wheels, going, "Oh, I'm trading an EMA, and I don't know why." Right? It's like I've fallen and I can't get up. It's so, we want you to have situational awareness when you're trading, right? We want you to be aware of your surroundings, right? So we're in distribution. When the market opens, I'm looking for a correction lower. Okay. Just because I'm seeing sellers starting to compete here, they're front running VWAP right now. So if we do get even a hint of a gap fill, we're going to have to come down and print 75.41. Okay. If that doesn't happen, we will rotate up. So here are your targets for the downside. If they don't get taken, you're going to get rotation up. If we can't take out 75.54, we might just go back and forth between 75.42 and 75.54. If it's choppy, this might be the trade. Do you guys get it? Do you understand? We'll still be in distribution of the cheaper product, but this is where your range is going to be. If it's slow, if business is slow, you're not going to get a ton of buying when a market opens on a gap. They're not fuel. They're where if you break that stop, Milo, anyone who's long here will probably be using the bottom of these last half hour bars for stops. So if you break those stops, the people who are using them, they'll start tumbling out and you could get a gap fill. That's how you look at it. If you fail to take the stops, right? If you get down there and you can't actually break them, then you will get that fuel that you're talking about. Because that fuel is buyers competing and the sellers are going, "Oh, look at them. Look at the suckers. They're lining up. Let's raise price. Quick, quick, quick. Get out there and put the prices up." Just like they're doing now. See? So overnight inventory is 100% long. And 4 minutes before the open, it does not look like it is correcting lower at all. Know what I mean? So basically watch if you're a short seller and this there's another thing too. We have what we call a poor high. So we have sellers competing at 58. If by chance this thing breaks 58 to the upside on the open, it's okay. You just zigged when you should have zagged, Milo. Don't worry about it. If we take out 58, look for the 66, 67 level. Let me just get rid of this one, right? Be careful because if we lose that, we have a seller at 58. They've been there for the whole Globex session. If suddenly they see buyers and start lifting, be careful shorting, right? A nice short would be a look above and fail of the overnight high or a look above and fail of 48, right? But remember that VWAP has been a bit of a pain in the butt for short sellers for the last couple of hours, right? Going back pretty much to since for the last 3 hours, VWAP has been, I can't say it, it's not politically correct. I just had a really good analogy, but I can't say it in public. Dang. Anyway, VWAP it's been the goalie, right? We can't get any lower than 41 on these liquidations. Let's see. Now let it watch. It's going to be annoying, and I bet you it goes back and forth over 48 and chops back and forth, which will be very annoying. Don't let it annoy you. Just relax. Oh boy. I, I I can't put it in the room. It's very politically incorrect. I'll get in trouble. We could have to start a trading room where we get people to sign a waiver. Oh man. It's almost Friday. I get to joke around a little bit. Listen, you can't survive in this business if you don't have a sense of humor. I tell you. Hey, there we go. So let's see. If you're taking trades before the open, I have not really traded a lot today. I've been on a lot of calls. So if we're doing the look above and fail of 48, say you're putting some sell orders in here under 48, and say you're short 47 right now. There's going to be buyers around 44. So if I'm short one at 47, I'm going to put a 44 and 3/4 and a 45 buy order in. And I got filled at both. Hey, cool. Let's see if I can close this before the open. I got two left at 47. I'm just going to buy them back at 45 just to be flat before the open. Okay? Quick little trade there. There's usually a little bit of buying in the open, in that opening sequence. So I kind of wanted to cover it, right? I was lucky I was filled at 44 and 3/4. That was definitely luck. All right, here we go. We're open at the overnight point of control. What a coincidence. Okay, hit those stops. Boom, boom, boom. And it's going to come up. Where's my seller? There we go. Right? So if you're shorting this area here, really, say you're short under 45, right? You want the next candle to open and stay under VWAP. If it doesn't do that, be careful because it might rip up on you, right? Wait for it. Wait for it. Ah, damn, I missed it. I wanted to short 41, 40 and 3/4, but I missed it. Damn big candles, eh? But that is a good, good, good short. And there, we filled the gap. Okay, that's cool. That's good. We filled the gap. If we stay inside yesterday's range, now sometimes you get a gap fill and you can buy the previous day high, right? You can long 36 and maybe get out at 38, 39 if it stays over this 35 half. Wait for it. Damn, these candles are not forgiving. They are not forgiving. I'll wait till the next candle. So here comes the next candle in about 4 seconds. Nope. Okay. Now I'm looking for a look below and fail of 29 and a half. Right? There was that pullback low when we corrected inventory before. I think a look below and fail of 29 and a half is what we'll be looking for. Or if we can pop back over 35 and go 36 to 38, 40. Let's see. Just don't overcommit. That's not a bad little inventory correction. We filled the gap. That's good. I wasn't expecting that. There's a seller at yesterday's high. Let some volume come in. See, and there's a seller at 35 half, 36. Let them clean that out. When they do, you go long a little, right? Buy 37, 36. Put some sell orders out at 38, 39. And if we hold 35 and 3/4, you'll go and move up over this seller here. See? Beautiful. There you go. So you're taking your 37, 36 product, sell it at 38, 39. Make sure you have your offers in so you can get filled, and you're done. There you go. Sell them before VWAP. Remember I said we're either going to get a 29 and a half or a 35 and a half. This time we did a deep dive, didn't quite get down there, and then big candle back right back to the upside. It's very easy to screw this up. These are very big candles. If you're not used to trading volatility of any kind, practice, right? And don't beat yourself up because it's not going to be easy. Okay. Trading the open is one of the most mechanically complicated trades there is. Yes, Milo, I've been talking about large candles for quite a while. So there is a specific business reason for these big candles. I'm going to let you answer. What are they? Let's see. Let's see if you've been listening, because I talk about this every day. Right? Let's see what you have. You been listening? I know there's a lot of crap to talk. Well, it's a little vague, but you're on the right road. Kind of there. Getting warmer, right? Keep going. Keep going. Looking for sellers at 54. No problem. All righty. Now, if we hold that 48 area, I think we'll take a run at the overnight high. There you go. Thin order book. Indeed. There you go, Milo. Thin order book. You nailed it. When big orders come into the book thins out. And really, right now, it's not that thick. So if you come in with some size, you're going to move the market. That's all there is to it. You understand? Way to think through it. Good stuff, man. Good, good. Yeah. And this is why I love this using these cost basis zones. Because if you see it, I was looking for a 35, 36 long here. And I always would take that trade early, get stopped out, and boom, then it would work like gangbusters, eh? Look at that. If you're just a minute too early on that trade, you just get blown out of the water. Don't worry, your timing will improve with repetition. Okay, and I will say that again. Your timing will improve with repetition. It's really as simple as that. Looking for that 55 stop. Alrighty. That dip under VWAP got a lot of people short. Right. Because remember the series of liquidation. Here we go. There's that overnight high. Don't be careful shorting if it accepts over, I'd say 60. What happens is the short sellers come in and cover, wholesale buys, and then we buy. And then what happens is the people who shorted and added here, they go to buy it back, and then look where we are. So anyone who's short under VWAP, when they went to cover in the last 5 minutes, they just got their teeth kicked in. Right? There aren't two different cost bases. Milo, there's only one. There's only one cost basis right here. Right? You see it? Here's your cost basis. Cost basis. 2 times profit, 4 times profit. So what I was trying to teach you was this one didn't work at first. I had to let it go and do a deep dive. When this one didn't happen, then it reclaimed. That's when I bought the level. No biggie. You're not going to have the same cost basis at me because you don't wake up at 2 o'clock in the morning New York time to do them, right? So that's why. But unless the market has like a 150 point Globex, huge move like we had yesterday, right? Where I had to redo the cost basis. But that's why I gave you that 5-step method. You redraw the cost basis, then you go, hey, is this working? If it's working, then you trade it with the micro to see whether or not you're working. First, you draw the levels out and see if the levels are working. Then you take some test trades to see if your brain is working, right? And then you can size up and start trading with the mini and stuff. Get it? This way, we don't start out on the wrong foot losing money, right? Losing big amounts of money. If you lose 20 or 30 bucks, you can make that back, right? But it's really hard starting the trading day when you take the first two trades and you're down 300 bucks. Why not be down 20 or 30 bucks and make sure that you are like your brain is firing on all 12 cylinders? Because if you're overtired, if you're sick, one of my guys this morning said, I need peace of mind to trade. If my kids are screaming, if my wife's in a bad mood, if I have to run here, do this, you can't trade. You need to focus your attention because unfortunately, the little details in this market are the ones that are going to screw you up. And if you're not 100% dialed in, you're going to be wrong a lot and you're going to get frustrated and you're going to make bad decisions. Now, the problem, like when you work at a hedge fund or you work on a trade desk, we were talking, I was like, yeah, if I catch a bid for a client, right, and I sell some stock for him, and and I've actually had this happen, and the client's like, okay, book it to my account, and I've had it happen with one of my clients. I had these guys from New York. They were brokers, and I had their offshore accounts, and I'd be like, oh crap, we screwed up this trade. I remember once distinctly I had a $25,000 loss because something went wrong. I don't know, one of the traders screwed up on a buy or a sell. And it was and I was like, I got this $25,000 hit. And the guys from New York had just sold, I think it was like a $3.1 million sell order, right? So there's like $3.1 million in cash in their account. And I go, guys, I got a 25 grand trade error. They're like, oh, kid, just stuff it in the account. Consider it a tip. Now, you can't do that when you're retail trading, right? You can't be offside 10, 20 grand. So you got to be really dialed in. And that's why I always say take your first trades with the micro. Sorry, while I was telling that story, I missed this long at 48, up to 50 cents. That was nice. Now let's see if we can stick the overnight high, right? So that's the thing about retail trading. You can't cheat. You got no place to stuff a $25,000 loss. You know what I mean? So you have to have your faculties. You have to be thinking clearly. Know what I mean? So don't trade if you're pissed off and you're upset or you're sick or you haven't slept. You're just asking to lose money. You need to be calm and you have to have peace of mind. Right? I can't trade. I When I'm institutional trading, I can screw around. I can have conversations, make jokes. Um, in the old days, you know, flirt with the girls, things like that. You can do that kind of thing. But when you're retail trading, you need focus because there's tiny little details that you have to watch, right? The details, the devil's in the details. Like there's a bid here, right? And the sellers are here, right? Very simple. So say you bought 56 or 57, make sure you got a sell order out at 59 and a quarter, 59, so you can make a couple of points. It might run higher than that, but what do you care? You know that there's a seller right there, right? So make sure you sell. And if you want to hold a runner, that's fine, but at least get paid for the trade. You know what I mean? It's slow biz because everybody's caught short and they don't know what to do. Right? And the buying's not coming in like gangbusters. It's that creepy, slow price action that catches the shorts, right? That is a breakout trade, but a quick one. That's like, Jonathan, that's like, how do I, like, that's like shoplifting, right? Yeah, 50, 50, 58, 59. What, if you buy 56 to 59, that's like stealing a Mars bar, right? It's not like a bank heist trade, right? Now, will it pop really hard? I don't know. Because I have no idea what's waiting here, right? That's why I'll buy that when it didn't take out the 56s, and I know there's a seller there. I'm gone by there. You guys can do whatever the hell you want here, right? I used to have this old Italian client. He'd always get cheap stock. This guy was always like, stocks at 30 cents, he got it at a nickel, right? You know, stocks at a buck, he got it at 10 cents. Always. And the stock would like move 30, 40%, he'd sell, be done. And then it would double or triple, and he would go, it can go without me, right? It's done what I needed it to do, right? And see where there was resistance before is now becoming support. That doesn't always happen, but it's just curious. See where the sellers were, now they flip to the bid. See? Yeah, he was a crazy old dude. He hated people. Loved animals, hated people. Made millions and just donated it to like SPCA or there's this dog that needs surgery, and it's like 10 grand. He'd send them 10 grand without even thinking. But he would destroy stock promoters and CEOs. Yeah, so like right now, no trade for me. If we get back underneath the overnight high, maybe a short down to 55. Maybe if I'm quick enough, maybe 57 or 58 to 55, maybe 56. But see how it gets to that 58 area and bid, 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 right? Here, let's see. Can we get underneath 58? Come on out. There we go. Ooh, damn, I missed it. Had to have been quick. Would have had to been quick there. Big, big ass candles. Look at that candle, eh? It's not even done yet. 60 all the way down to 54. With 6 seconds left. Look at this sucker. See, that's a short I called out, but I didn't even have my hand on the mouse when I was there. That was like lack of discipline. Guilty. Right. You got it? Nice. Nice work, Jay. Good. At least you guys are on the ball. I'm ready for the weekend. There's not a cloud in the sky in the beautiful city of Liverpool. The outdoors is calling to me. Good stuff, Matt. Good. Good. I got nothing to complain about. It's been a good week, but I think in the summer we should just have 4-day trading weeks. I think every Friday should be off in the summer. How can you tell I'm getting old, eh? My 25-year-old self would have hated that statement. Okay, what's next? I think we should be like surfers. When it's nice and sunny, we shouldn't trade. Just go outside. Well, that's the thing, you know. That's the nice thing about once you actually start making money at this, you can, take time off, not trade month end. you know. No, I wish my 25-year-old self would be chilling in the bar, Mike. To tell you the truth, my 25-year-old self right now would be screaming into 3 cell phones, wondering why nobody else is working. I was a little ACDC when I was 25. My priorities were really a little screwed up because when I was like until I got to 25, I was really irresponsible. All I wanted to do was party and be a good time Charlie. And then I decided, okay, after 25, I'm going to grow up. And I kind of flipped the switch a little too hard. There's some bids at 52. Where's our seller? Man, this market is like you get like big candle, small candle, small candle, big candle, right? Yeah. I mean, no regrets, but man, I flipped a little too hard from like partying guy to serious guy. And I got too serious too quick. Now let's see if we hold that overnight high. See, I just tried to buy 60 and a quarter. No way I didn't get it. No way. I was just curious to see if I could get a couple of contracts at 60 and a quarter, but I couldn't. So where's our next stop? 63.95. Go 63 and a half on the offer if you are long. 63 quarter, 63 half. We should get up there unless this thing just totally tanks. Come on. They really don't want to buy it up here. This is forced buying. This is some serious forced buying. Make sure you're offered if you're long, eh, folks? There you go. You're at 63 and a quarter. Yeah, make sure you're offered. Don't wait for an invitation to sell in this market. There you go. There you go. Oh boy. 65.99 to short, yes. Okay. Well, if we get back under 65.99, 65.59, Glenn, sure. Back down to 65, 75.11, I can dig it. Right now, we're still too busy selling contracts up here at 63, Glenn. But I could see that trade a little later on after these guys are done selling. How many people do you think are short on the overnight high? Look at these candles. We're from 75.52 to 75.64 in 3 minutes. Ah, okay. Right here. Yeah, oh, there is a stop right there. I could see that slowing down a little bit. That'd be cool. I'll buy that for $1. Oh boy. Sellers are raising prices and buyers are willing. Well, buyers have to pay if you want to buy it badly enough, you gotta. They're forced to pay up. Exactly. They're not willing, they're forced. It's like when my buddy Paulie, he had 3 boys, and every Christmas there'd be like some new gadget, PlayStation, Xbox 3500, whatever that crap. And he would have to go stand in line to buy this thing. And the guys at the front of the line, they'd be flipping them to the guys in the back for like, 2 times what they paid for the stupid thing. I was like, why don't you just buy your kids a book, man? Be like my parents. Your friend Greg? He has a PlayStation. You go to his house and then you come back and study. We're getting up to the cost basis of the 7th. Let's see. Yeah, that's why, it's really funny, Jonathan and Milo, when people say, oh, yeah, price is going up, buyers are in control. Let me ask you, what buyer wants to pay more? Does it, it's $5, but I got to pay 8. Am I in control? I don't think so. Hey, Keith, how you doing? Oh. The other good one is the buyers and the sellers are fighting. When was the last time you went into Walmart to buy a TV and you asked the guy, could you tell me where the 75-inch TVs are? And the guy pulled out a knife and started waving it at you. Well, I don't know. It could happen in a Walmart. I don't know. But I'm just saying, as a general business practice, right? So if you're shorting against the 66s, sorry, it's best not to attack the customer when they want to buy something, right? That's when the buyers are fighting each other. Control is after rejection of a level. There's no control. There's only commerce. We've got a little distribution here, Matt. There's a little bit of distribution, right? We're taking the cheap stuff we bought here. We're selling it. What I want to see is I want to see them put it on sale back down to 54. That would be nice. You could short a little at 63, 64, put your stop at 65, and have it dip down a little bit. But this is not an A plus setup. The only reason is because I see a seller here, right? If we lose, that's where your stop would be. If you're short here, that's where your stop would be. Now, where are you going to bid? I'm short 3 contracts at 63, cover one at 61, another one at 61 and a quarter, and I'm bid 60, but I'm not getting any. I'll go 60 quarter. Oh, okay, I'll pay 60 half. I'm flat. So I shorted 63, right? And I put my stop here because there's my seller. And then I went to put my bids down here just to make a couple of points. See? That's what we call shorting the backfill, right? You know that they're going to put price on sale to bring in buyers. So you sell with them. When they stop selling, you cover. Do you guys understand the concept of that, the mechanics behind that? The business reason behind that is that what you see that they're selling and they move their sell orders from here to here to here. So you short this and you put your stop here. And then this is where you're likely to find bids to go and put some buy orders here. So they're putting it on sale to bring in buyers. You short it down. When they find those buyers, you quickly cover. Get out of it. Take 2 or 3 points. Hey, on 4 E-minis, even if you make 2 points on 4 E-minis, that's not bad, right? And, the trade takes a minute, right? The backfill creates more buying to bring in suckers, right? It's just like when you walk onto a car lot and they got a really hot car. And the salesman, he sees you coming from 3 blocks away. He knows you want the car really badly. All you do is you've memorized the specs of the car. You're not walking out of there with a deal. Right? They see you coming. Right? And the more eager you are, the less likely you're going to get a deal. And conversely, when they see you come onto the parking lot, onto the car lot, and, oh, I just lost my job, I got to sell my car, that's when they're going to stick it to you. I know it sounds horrible, but that's business. Right? Right? One thing that you have to learn in this business, and I know this sounds horrible, but this business is built on taking advantage of people who are in trouble. You know, when you are when you know you have shorts trapped in your market, you will just jam it. You know, you'll jam the stock. Like on this deal here, okay, the point of control is now up here. Good distribution, right? Good distribution. Nice, 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 nice. For example, on this deal that we did, you see here, we got our shorts trapped under 20 bucks. And once we had the shorts trapped under 20, it was so easy just to rail the thing. Just so easy. You see how we got everybody cut short under 20? And then we popped it up to $30 and boom. Next thing you know, we're at 50 bucks. Doing $65 million a day. Right? It's not an A+ setup, but on back files, is it easier to short with sellers? It's easier to buy and go long. Because that trade I took, Italian trader, sounds really easy, but I'll tell you, I screwed that trade up so many times trying to get it right. It seems easy, but it only seems easy because you have worked it so many times and you've worked on it and you've worked on it and you've worked on it, that, it's just like anything, it's a skill. It's a lot easier to go long when the shorts come into cover, especially in a market that has limited supply, right? So you got a market with limited supply. No, it's not easier to find sellers. It's actually the opposite. It's actually the opposite. So it seems easier for you because I'm telling you about it usually 2 to 3 minutes before it happens on the short side. If I wasn't around calling it out, you wouldn't see that little detail, right? In a market where supply is limited, shorting is always difficult, right? With execution and repetition of execution, it gets better. Yeah. Yeah, the POC moving up also sometimes helps because the POC moves up. It means, oh, distribution is good. Now we're going to put it on sale. No, you're right. You're right. You're right. Yeah, now you get it. You're seeing it right. Executing it quickly in a 30 to 60-second time frame, that's another story. Exactly. Now you got it. Cool. Sorry, while we've been speaking, what's been going on here? Oh, we're still in distribution. Uh, yeah, I'd say a little back and forth here. Now, we've been open for about 40 minutes, maybe another half hour pre-market. I would like to see where the bids are. I would like to see, quite frankly, if we could go down and test that previous day high again. Like right here. I would love a test of this again. Exactly, Dave. Yeah, in Canada, I think we call that a B train. Yeah, learning how to parallel park that's going to take some practice. Here we go. Come on, lower. Here, let's go. What do we got? Sorry, did I say 75? Not 53, 36. I don't know what's wrong. I can't read today. Right? See, now they have classes for you guys. In the old days, Jonathan, they would just give you the most beat up truck and say, go practice. No instruction at all. Oh, man. Okay. What else is going on? How's the SPY? Range bound, huh? Okay, we're dropping into VWAP. Let's see. So we tagged 48. Let's see if we. There's VWAP. I got no interest in being a buyer right now. I'll wait till the next candle. And if that next candle can't get down underneath VWAP, it's a buy. Right? So if you buy the 49s, your stop will be 48. Go try and sell some at like, 50 and 3/4. If we lose 48, then the trade's kind of screwed and we'll probably come down to VWAP. Watch the offer. Right? I might be a little early. Might be a little early here. Oh, yeah, there I was early. Right? So I scratched the trade. I'm out. Right? I bought 49 too early. As soon as it broke 48, I was like, uh-oh. Uh-oh. Now maybe let's see if it works. Nope. Gotta wait. Gotta wait. There we go. It's a little heavy at 50, eh? Hmm. There you go. All right. Yeah, did the 48 1/4 to 50, and I got 2 left. I got 1 left, and I'm out at 50 and 3/4. Right. First time I screwed it up, then I took it. I bought it on this red candle. I should have waited. So I took it, scratched, bought it back again at 48 1/4, sold it 49 3/4 and 50 1/4. It's not the greatest trade. Now, if we can stick the 51s, we'll go up to here, just under 54. This is going to blow you away. It's too simple. That's all it is. They're back now, by the way, right? They heard us. They're back. Now, if you are of the shorting persuasion, right, and you decide maybe I'll sell the 44s, I'm a little low, right? Sold 44 1/4, put a 42.5 bid in, buy one. I got 2 left at 44 3/8, 41 3/4 cover, 41 and 42. I'm flat, right? Looking for yesterday's high, Matt. Looking for yesterday's high. So that's a little long told me, hey, there's a seller. Then they got really aggressive. I was a little low in my short, right? I got in at 44 and a quarter on one and a half on the other two. So it was like the 3/8 average, right? I could have held it a little longer, right? But I think I had happy feet on that trade. So I kind of punched out of it quick. Now let's see if we do a look below and fail of 35. Wait for the next candle. I would wait for the next candle because we got inventory above us. Let's see. Oh, I might miss it. Where's that seller? So see, Marlo, under 35, the sell orders are done. The next candle will confirm, right? The next candle will open now. And let's see if we can stay above 37 on that candle. So you're long 59, 75.39, long 4, selling them at 41. I got 2 left, right? I got 1 left, and I'm out at 41 and 3/4. There you go. Took it, shorted it down, then took the look below and fail. And that's it. You're done. Well, in this whole trading strategy, you're scalping. Yeah, you don't have the skill to do anything else, Milo. That's why you're scalping. It's the best way to learn. Unless you've got like an extra $10 million you haven't told me about, and you can afford to lose 20 or 30 grand on a trade, then DM me, we'll talk. But if you're just like a regular guy and you're learning how to trade, I mean, on those trades that I've done, right, I've scalped 27 points. On a couple of contracts, like you make $1,300 and you're done. Is that something that you could get behind? And then you just kind of chill out for a little bit, right? Make a little money and chill out, right? So people say you can't make money scalping. I know people who make, $1 million a year scalping. I know because I've trained them. It works. And now I'm done. That's the nice thing. I'm done. So if you make like a couple of grand before the market opens, 1,000, $1,300 when the market opens, you make 2 or 3 grand a day. Like, and I'm just talking on my client accounts, now I can relax. Right? So a Glomex market is generally slower, but that's good because you are slow, right? If you're learning how to trade, if you're learning how to be consistent, it's best if you pick the time that's most advantageous to your skill level. This is what they don't tell traders. They don't tell them, listen, you shouldn't be trading RTH because you don't have the skill. Hey, Glenn, looking for 75.11 now on the downside, brother. Right? So if we correct inventory, we're looking for a correction all the way to 15. None of us have the skill to trade RTH when we first start trading. I would be really freaked out if you took somebody who's never traded before, sit them in front of these screens where they don't even know how to use the software and expect them to make money. I was on with one of my guys who's in my coaching class, and I realized I hadn't done the DOM exercises with him. He shared his screen. I gave him 3 trades. He was fumbling around like Dudley Moore in that movie 10 with Bo Derek. He was fumbling around on his DOM. I could have done 3 trades in the time it took him to enter 1 trade, maybe 4. You got to practice your skill using your software. So it's unheard of that somebody can just sit down and start trading and make money. Learning how to use the software and place your orders alone is a skill. You guys get it? So it's one thing to see the cost basis. Then it's another thing to understand how the trade works. Then this is the problem part, is the execution. The execution, because just as soon as you get the execution, the market changes and you have to adapt your execution to fit the market. Very hard stuff, and that's why we do these execution classes. That's why I post stuff all the time. I do the little videos so you guys can build your skill, know what to look for and what to concentrate on. So you're concentrating on the right things so you're not wasting a bunch of energy on stuff that doesn't matter, right? You want to conserve your energy for when you need it. Like for when you're actually in the fight, when you're getting punched in the face, that's when you need your energy. And if you had spent it all this time looking at bookmark and this and that and all this, you've wasted a bunch of mental resources when you should be focusing on, look at that, long, stop, sell, right? And just here, if we're buying this area, right? We're looking to buy 35, 36, 37, right? There's going to be a seller at 40. Once you clear that 40, your seller should be at 41, 42, right? What did you see that led you to think about the candles going down to the previous day high? Oh, just the business, Keith. That's just a pure business transaction. That would be a place where buyers would be, and there were, right? Yeah, it's pretty cool. And this is another thing. If you trade the ES and stick to the ES, you're going to get to know it pretty well, right? It's kind of a one-trick pony. If you get to know the market really well, right? So long 38 and a quarter, out one at 40, offered at 40 and a half, out one at 40 and a half. I got one left, out one at 42. Done. Right. Well, it's a big market, Keith. Brother, have you seen the ranges that we have? I mean, we got some pretty big ranges. So those big drops, they're not really that big. 10 years ago, they would have been a huge drop. Now it's just an inventory correction, my friend. And this is the adapting to how the markets are. Learn one market. Learn the market like you would know, like your wife or your girlfriend. When she's in a bad mood, You know when you can joke around with her and you know when you have to go hide in the garage, right? Learn one market. Be obsessive about one market. You will find that you will pick up on little things, right? You know what? There was a buyer here before. What, an hour ago? They're there again. Not bad trading. Learn one market, Keith. Get to know a market like you know your wife, right? You know when she's in a bad mood. You know, like all the little subtle things. Like when you ask her how she is and she says, I'm fine. You know things aren't good, right? That's why I'm a believer, right, in trading one market. Because this one market, you can make 5, 10 million a month trading ES, right? If you're skilled and you have capital and you know what you're doing. You can do it. There are people who do it. Or, if you're just a regular person, you can make 10, 15, 20 grand a month just trading ES, right? Make a living, pay your bills, have a lower stress trading experience because you're not trying to figure out is the market going to go higher? Is it going to go lower? Where are the buyers? Oh, there's buyers at 29. Okay. There's buyers at 35. Great. It's holding 36. I'll buy some at 38, put my stop at 36, sell it at 40, 42. Thank you. Or 30, 38, 38 to 42, make 4 points on 4 contracts. Thank you. In and out, make the money and just run. Now, if we stick the 48s, you're looking for sellers at 54 and a quarter. This is what we call rotation. We, my friends, are in a big rotation now. Big rotation. See? And what would be nice is if we just do this all day. Boom, 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 boom. Trade it from the outside in. It's beautiful. Ah, yes, the poor low, my friend. The poor low in the overnight. It is a part of distribution. You use the shorts that are trapped under that poor low to hold the market up so you can distribute at higher prices. Great question. Beautiful trading this morning. Big candles, good range, decent follow through, but slow enough that you can actually make a buck. Not too bad. I'll take it. And that is it for me, my friends. Have a great, great trading day. Please come visit us at tradingsyndicate.org. We'll teach you how to do this. We'll teach you how to make a living. If you have any questions, reach out. I'm around. And see you tomorrow morning. Have a great day, everyone. Thanks for showing up. Appreciate you guys. Don't take candy from strange market makers. Bye for now.